This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, March 13th, 2024. Of course, that means it's DCA Wednesday, and we do have a lot to talk about this week. However, this week I'm up against kind of a hard limit, so I'm going to try and keep this short and sweet. I know I say that almost every week, and almost every time I say that, we end up going well over an hour, but this time I cannot, so I'm going to try my absolute best to wrap this one up in under an hour this time. But we do have a lot to talk about. Things are certainly hectic out there, especially here on the Space Coast of Florida, where it is spring break. Depending on which school you attend, spring break is in full effect, which means this entire city is a zoo full of really sunburned tourists, a lot of college students, and it's just nuts out there. I live on a barrier island. This is a relatively small town, but it's a tourist town. So we have like 10,000 people that live here full time and probably close to 1 million people partying here right now. And, that's one of the fun things about being that age, but it makes it difficult to go about your daily business. It makes it difficult to go to the store or get a bite to eat. But it's also what makes the economy thrive. So, if you're a small business owner, you're bullish on spring break, and we certainly are bullish on Bitcoin, as are a lot of people, because as we mentioned last week, we had briefly eclipsed the all-time high before the halving, making it the first time in Bitcoin's history that has happened. Usually, as we mention almost every podcast, Bitcoin sets a new all-time high about 6 months to a year after the halving. We are still about a month away from the halving, and we've been setting one all-time high after another. Depending on where you get that data, that's in the $73,000 range. According to Clark Moody's dashboard, for example, the all-time high was $73,120 earlier this morning. And Coinbase lists their all-time high as $73,709, about a $600 discrepancy there, but that is the nature of the beast, depending on who's keeping track of the data and what their order book looks like, I suppose. Either way, the one thing that is certain is that this time is certainly different. That obviously was the title of last week's episode, but we have a lot more to talk about than just the price, and since we're pressed for time, let's dive right into it with the vital statistics. At the time of this recording, we are sitting at a block height of 834,597, and Bitcoin is ringing in at $72,810 per Bitcoin. That is an all-time high as far as this podcast is concerned. We've certainly never stacked at that price. Last week, we were in the $66,000 range. So we're talking more than $6,000 more expensive in US dollar terms than just last week. Along those lines, one filthy US dollar will purchase you 1,373 sats. That is more than 100 sats fewer per dollar than last week. And that's going to trend to zero as the US dollar trends to zero in Bitcoin terms. Obviously, when we breach that $100,000 mark, we'll only be getting 1,000 sats per US dollar, and it's gonna continue to go down from there. That is just the nature of the beast. That is why, obviously, you want to get in as early as you can. And while I say we're still early, obviously we are still early. We're not crazy early like we were 3 years ago when we started this podcast, for example. And that obviously wasn't anywhere near as the people that got in at less than $100 a Bitcoin or less than $1 a Bitcoin, or mined the first couple blocks before there was even an exchange, a marketplace for Bitcoin or an exchange rate for Bitcoin. So much as number go up, US fiat value go down. And that is by design. Speaking of block height, we are just now 5,403 blocks from the halving. That's still an exciting time. That is really going to pour gasoline on this bull run fire. Usually, the halving takes a while to have an effect, for it to get priced in. The supply shock that results when the supply of freshly mined Bitcoin going to market, going to exchange, gets cut in half. I guess we'll have to wait and see what happens, because obviously this time is completely different with the price of Bitcoin already soaring as the ETFs soak up as much Bitcoin as they can convince you to sell. obviously soaking up far more Bitcoin than the miners are supplying. So maybe it'll have a muted effect this year because they've already soaked up the entirety of the mining supply, and now they're having to convince you to sell your Bitcoin for them to keep stacking. That 5,403 blocks looks like will take just a little over a month to occur. Currently, the halving estimates are showing that the halving will occur approximately on April 19th. That's been sliding back and forth between April 20th and April 19th, all month, all spring, all year, really. And that is because the halving occurs every 210,000 blocks, obviously not once every 4 years. It just works out to be about every 4 years. And of course, the next halving occurs at block 840,000. When that occurs, it depends entirely upon how fast those blocks are coming in. And right now, as we will get into in a minute, they are zooming by. But before we get too far ahead of ourselves, Bitcoin's current US dollar price gives it a market capitalization of $1.43 trillion. That is all-time high territory, at least as far as our podcast is concerned. And it means that we've officially eclipsed silver's market capitalization. So one down, one to go, right? Silver has a market cap right now of about $1.319 trillion. So with a market cap of $1.43 trillion, we have surpassed that and surpassed that significantly. Gold, of course, has a much larger market cap than silver. Its market cap is more than 14 trillion. So we still have more than 10x to go before we eclipse gold. But of course, I firmly believe that will happen one day, whether that happens this cycle or whether that happens 2 cycles or 3 cycles from now, or whether we're done with the 4-year cycle altogether and we end up with that mythological super cycle that people have been predicting since as long as I can remember, at least since 2016. Only time will tell. I would have guessed that we have another cycle or two to go before we, before the halving cycle kind of were to fade away and have less significance. Obviously, as more normies get into Bitcoin, more institutional money, that is, gets into Bitcoin, more normies get into Bitcoin through the ETF product, that would tend to dampen that, dampen two things, dampen that panic response, because BlackRock is, and funds that are holding Bitcoin are less likely to panic sell than the normies who only got into Bitcoin at the all-time high because their friends finally convinced them to, and only because the price was so high, how could they resist? The people that buy in the week or two before Bitcoin has its Bitcoin winter, the price retracement, and enters that 2-year bear to bear crab market. So funds, I believe, are obviously a lot less likely to do that. Obviously, the ETF isn't in the business of trading. They don't have stop loss orders, et cetera, set. They buy and sell Bitcoin when they buy and sell their shares. So I guess we won't know, because as with everything with Bitcoin, nobody really has a crystal ball. Nobody can see the future, but I would have thought that we had at least 1 or 2 more halving cycles in us. Maybe we do. Only time will tell. I guess we'll get a better idea for that when we see what kind of effect the halving has on this bull run that's already kicked off. All right, for those of you who still value your wealth in shiny yellow rocks, it will now cost you 35.8 ounces of gold to purchase just 1 Bitcoin. The gold bugs that are not also Bitcoiners, the ones that are thoroughly in denial, you know who we're talking about in particular, the Peter Schiffs of the world that will take their gold bars to the grave with them one day, shaking their fist at Bitcoin the whole way down. They'll like to tout to you that gold is in all-time high territory. They brag about their 1%, 2%, 3% gains, as gold is in the $2,200 per ounce territory. But gold is set an all-time record low in Bitcoin terms, and it will currently cost you 35.8 ounces of gold to purchase just 1 Bitcoin. That is more than 2 pounds of Bitcoin. That's more than 2 pounds, 3 ounces of gold to purchase just 1 Bitcoin. And as I frequently say, the saying is you get Bitcoin at the price you deserve, and it's getting more expensive literally by the day, sometimes by the hour. So if you are a gold bug and you've been on the fence, it's only a matter of time before we're talking about 3 pounds of gold to purchase just 1 Bitcoin, or 4 pounds of gold before to purchase just 1 Bitcoin. So it's never too late, but it's obviously more advantageous to have been in earlier. For those of you who value your wealth in pizza, 1 Bitcoin will currently purchase you 4,072 large pepperoni pizzas from Papa John's. That is a new pizza all-time high. That is one pizza a day, every day for more than 11 years. I used to say that, it was nice that if you had one Bitcoin, you knew that if nothing else, you could feed your family for 8 years, 9 years, 10 years. And then it dawned on me slowly that, you were never going to be able to eat your last slice of pizza when you're on a Bitcoin standard, because 11 years from now is almost 3 bull runs, 3 halving cycles from now. Obviously, if we hit hyper Bitcoinization and Bitcoin just continues to shoot up and to the right forever until it's the global reserve currency, then Bitcoin's going to continue to trend up with, explosive results and no down cycles. But even if the cycles continue exactly as they always have, you're going to have gone through 3 more bull cycles, 3 more all-time highs before you would run out of Bitcoin. And obviously, since we went from 4 years worth of pizza to all the way up to more than 11 years worth of pizza, just in the last couple of months, it's reasonable to conclude that you'll never be able to spend your Bitcoin. If you're purchasing just one pizza a day with your Bitcoin and you have a whole coin, it's conceivable you will never be able to spend all of your Satoshis, because they'll go up in value faster than you can eat. And that is really cool, because that's more than just security. That's security. And now we're starting to talk about generational wealth, although generational pizza wealth. But hey, you got to start somewhere, and eating. Obviously, pizza is not my recommendation for the best thing to do, although that's what we had tonight, and almost prevented me from recording this podcast, because whatever it was did not sit well with me at all. But we had pizza because it was a family member's 27th birthday today, so we all went out to this wood-fired pizza place and had some foo-foo pizza, which were a little more expensive than Papa John's pizzas, but still, it's nice to know that even if you have to eat fiat food, that you could still eat basically infinitely once a day for your Bitcoin, at least hypothetically. And speaking of Bitcoin activity, the mempool is looking a little clearer. Of course, Clark Moody's mempool and Clark Moody's dashboard is a little controversial because it's limited to 300 megabytes, so it excludes a lot of transactions, but that's the one we've been following. And up until the whole ordinals and inscriptions thing, it was a really reliable indicator because the mempools were not always full. They were clearing. But nonetheless, Clark Moody's showing that there are currently 68 blocks worth of transactions pending in his mempool, and that is down from the 91 blocks pending last week. So a significant decrease in on-chain transactions pending in the mempool. And along those lines, if you have an on-chain transaction that you need to make, that you're not using the Lightning Network, but you're paying, or you're transferring, or you're consolidating on-chain, Clark Moody's dashboard is estimating that it will cost you a fee of 27 sats per VByte to have that transaction confirmed in the next block or so. That is a dramatic improvement from last week, where they were recommending 87 sats per VByte. And they're recommending that if you have a day or so to wait, that a fee of just 13 sats per VByte will clear. And that if you have more than a day, up to a week perchance, that a fee of 11 sats per VByte will get the job done. Mempool.space, as often, is telling a slightly different story. Their recommendation for a high priority transaction is a mere 16 sats per VByte. And even with the price of Bitcoin at an all-time high, that is down to $1.63 for a high priority transaction. That is fairly inexpensive. Obviously, if you're used to those 1 sat per VByte fees, just pennies to move a transaction, $1.63 is a lot more expensive. But if you're talking about paying for a house or sending money anywhere in the world, especially to a place someone might not want you to send, money that can't be confiscated or clawed back, $1.63 is a freaking bargain. And if you have a little bit longer to wait, their medium priority fee is an estimate of just 14 sats per VByte. Their low priority is recommending 13 sats per VByte, and the no priority transaction, they're saying you can get away with as low as 4 sats per VByte. As I mentioned about 2 weeks ago now, I consolidated some transactions and I put a fee of just 10 sats per VByte, and it got mined in the very next block, even though the recommendation was a lot higher than that. I used a medium priority fee because I didn't mind waiting all night, because it was just a consolidation. I knew where it was going, and I didn't care if it took 2 or 3 days to get there. And it mined and confirmed in the very next block. And looking at mempool.space, all of the last several blocks they contain 10 sat per VByte transactions. So it's a little bit cheaper right now. So it's not too late to do some of that consolidation if you're worried about, your smaller UTXOs becoming unspendable because fees go through the roof. You might seriously consider doing your consolidations, or at least if you if 16 sats per V-byte is too rich for your blood, or 4 sats per V-byte is too rich for your blood, who knows what will happen. Usually over the weekend, there's a lot less on-chain activity, and the speeds might even go even lower. Nobody knows for sure, though, because like everything else in Bitcoin, as I always say, I do not have a crystal ball. Anybody that tells you they know what Bitcoin's going to do is a liar. Even in a bull run like this, where we quote unquote know that Bitcoin's going to keep going up and to the right, and we don't know. There could be a black swan. Something could happen, but it's a pretty good educated guess that Bitcoin's going to keep going up and to the right. But we say that with a high degree of faith and confidence and belief in Bitcoin, because we're Bitcoiners and we know that Bitcoin is revolutionary, that Bitcoin is the future, that Bitcoin is hope. It's not that we can actually predict the future, although it sure feels like it when you're right? That's part of what leads to the whole euphoria thing during the bull run. People start getting full of themselves, patting themselves on the back, thinking they're geniuses. Even the humblest amongst us, the Matt Odells of this world, remember last bull run, but in between the two peaks when we were coming up on the Bitcoin conference in Miami, Odell was tweeting out and shouting out 200K by conference day. And obviously that didn't happen. So it's easy to get carried away. It's easy to be euphoric, especially when you're making price predictions and all your friends and family are starting to tell you, boy, I wish I'd listened to you about Bitcoin. And boy, you were right. I wish I'd bought more, or whatever they tell you. And then of course, when Bitcoin enters its bear market after the blow off top, and they stop talking to you again and forget that they thought you were a genius. And then you get humbled again. But in the meantime, it's fun. Remember to stay humble while you're stacking those sats, but enjoy it too, because, if you can't enjoy the highs, that makes it that much harder to tolerate the lows. All right. I keep getting ahead of myself. That statistic that I like to follow, the metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, is up to 4.51 transactions per second. That's up a little bit from last week. As you know, last week we had set that new all-time high the first time, broken the all-time high for the first time, and the transaction volume was about 4.46 transactions per second, and Bitcoin is still going up, and the on-chain activity is approximately 4.51 transactions per second, despite the fact that mempools are clearing out. So, that's just an average, like everything else that we tend to talk about. And it isn't any kind of TA. And I've said repeatedly, all TA is BS. It's fun to look at the charts. I prefer the historic charts because they're not really forecasting you anything. They're showing where you've been. And because, like most things in life, history tends to rhyme, if not repeat. It's useful to know where we are, to figure out where we're going, as the saying says. So I'm not a TA guy, but I found this interesting that for at least for the duration of this podcast, that every time I've looked at the statistic and we've been greater than 3.15 transactions per second, the price of Bitcoin has been trending up. So again, nobody has a crystal ball. TA is voodoo. It doesn't exist, in my humble opinion. It's just a guess, and sometimes they're right, sometimes they're wrong. People usually delete their tweets when they're wrong, so you only see their tweets when they were right. But it's just interesting that it's worked out that way. All right. Speaking of on-chain, speaking of how busy the network is, speaking of mining, we are just 27 blocks away from the next mining difficulty adjustment. Of course, this doesn't really matter to you a whole lot unless you're a Bitcoin miner, because the difference between, a block coming in less than 10 minutes or just longer than 10 minutes is really kind of irrelevant, because it's just an average anyway. The next block could come in immediately, or it could come in an hour from now. Chances of it coming in at exactly what the average time is pretty slim, but it is one of Bitcoin's more genius methods to keep, Bitcoin running smoothly and consistently. And we're just about 27 blocks away from that next difficulty adjustment. And it's going to be another big difficulty increase. Depending on which data set you're looking at, it's going to be an increase of anywhere from 5.9% to 6.22%. Of course, 2 weeks ago, we had a difficulty decrease of 2.9%. We're giving that back, and we're giving that back and then some. We're going to give back, if we get a 6.22% difficulty increase, that's more than double the decrease that we just had. And that is because for Bitcoin's entire history, the hash rate, the amount of mining power, the computing power that goes towards securing the Bitcoin network has been going up and to the right, just like the price has. In fact, hash power has been going up even during the bull markets, because people are bullish on Bitcoin, even if they're not bullish on price, even if the normies aren't bullish on price. So as as it gets harder and harder to mine Bitcoin, as more computing power gets dedicated to mining the next block, obviously they have to adjust the difficulty with the goal of keeping the blocks coming in at once every 10 minutes. Currently, that is not the case. Blocks are averaging 9 minutes and 26 seconds. Obviously, that's significantly faster than 10 minutes, and that's why we're looking at a relatively significant difficulty increase. And with just 27 blocks to go, that's a pretty solid average. I'm actually surprised to see the two sources of data diverging as much as 0.3%. That's pretty significant. So there's a little bit of room for margin from error there in how they're figuring out their average. And of course, nobody actually knows how much hash rate's on the network. That's also just a guess because, they figured it out by looking at how fast blocks are coming in on average for the most part. And since that is an average, like flipping a coin 2016 times, it should work out to a reliable picture of exactly how much hash rate is securing the network. But, there is some variable there, some variation there, room for variance. All right. Real quick, I want to thank those of you who are listening on your favorite podcasting 2.0 apps, such as Fountain. Fountain allows you to support your favorite podcasts via the value for value model, where you can either stream sats on a per minute basis or send a one-time boost to the podcast, which is a Lightning transaction where you send a message or a shout out to the podcast along with some Satoshis that help show your support for your favorite podcast. And we do have one boost to read this week, and that comes from longtime supporter of the podcast, Leggy. Leggy sends 2,222 sats and says thanks. As usual, Leggy, thank you. Thank you for being a longtime supporter. More than just the sats, it's always good to know that you're out there, that you're listening. It's nice to know where everybody is, to get kind of a visualization of the audience, because that's why I do this podcast, is because I enjoy talking about Bitcoin and I enjoy helping orange pill people, but I also enjoy helping encourage fellow plebs I might not even met before, most likely haven't met before, would love to meet sometime in the future. Hopefully we can meet up at a conference one of these days, especially you, Leggy, because I'm really, really jealous of all the neat things I see going on with the European Bitcoiners. I was just listening to Daniel Prince's Once Bitten podcast the other day, and they were talking about, what's going on in Holland, and there's going to be a big Bitcoin Pizza Day party. Of course, you've got Bitcoin Prague coming up this June, and before that, the Bitcoiners in Germany are throwing a huge Bitcoin meetup, like a 3-day, basically not a conference, but like a 3-day Bitcoin hangout, Bitcoin party in Berlin, and that just looks like so much fun. Every time I go on Twitter and see one of the European Bitcoiners I'm following, they're always doing something really cool, and we have some good times here in the United States too, but we just don't do as many neat little things. Some places have a pretty good Bitcoin scene, Austin, Nashville, but it just isn't on par with what I'm seeing the Europlebs doing, and that's really cool. Good for you guys, and hopefully I get over there and check one of those meetups out, because I'm jealous. I have Euro Bitcoin meetup FOMO going on big time. But speaking of Europe, speaking of our listeners, our geographic distribution of listeners has not changed. We're pretty ossified as far as that's concerned. Our top 10 countries remain as follows. Of course, number 1 is the United States, where more than half of you are listening from. So hello to all my fellow Americans. Thank you for listening. Number 2 remains Argentina. So muchos gracias, amigos, in Argentina. Number 3 remains Germany. So guten Abend, mein Freunde in Deutschland. Dankeschön, danke für alles. Number 4 remains Luxembourg. Again, guten Abend, Dankeschön, mein Freunde in Luxembourg, or Morien to those of you speaking Luxembourgish. Number 5 remains Canada. So hello to my friends up north in Canada, where the weather's got to be improving, because we're full on. It feels like it's summer here today. We're in the mid 80s. It's gorgeous and sunny, and everybody's running around on the beach with barely any clothes on and really sunburned. Number 6 remains Spain. So muchas gracias, amigos, in Spain. Number 7 remains Colombia. Again, muchas gracias, amigos, in Colombia. Number 8 remains Sweden. So hey, I'm not even going to try to say the taksama McKay part, or I guess I did, to our friends in Sweden. Number 9 remains the United Kingdom. So good day to you, chaps. Jolly good. Our friends in England, jolly old England. Number 10 remains Venezuela. So again, muchas gracias, amigos, listening in Venezuela. All right. Real quickly, let's going to breeze through the news, because we're over halfway through my time here and I still have to make our DCA stack. But basically, the news has been the price. we're in uncharted territory here with Bitcoin breaching all-time high after all-time high. Max Kaiser had forecast that we'd hit 75K by Friday. Obviously, that didn't happen. Then he said, well, Monday would be okay. Obviously, that didn't happen. Duh. Of course it didn't happen. Well, not of course it didn't happen. There's no reason it couldn't happen, but duh, he doesn't have a crystal ball. He doesn't know what's going to happen. But again, Max Kaiser is an OG. He's been touting Bitcoin since it was $1. So he's entitled to a big pat on the back. Even if you don't like Max Kaiser, he's been right about a lot of things when it comes to Bitcoin. So he deserves to celebrate, because it doesn't get much more OG influencer anyway than, there's people that have been longer OGs than Max Kaiser. But as far as people trying to orange pill people and convince people, like Max Kaiser's been trying to convince Peter Schiff to get into Bitcoin since Bitcoin was $1. So Max Kaiser's an OG, but he was wrong. Because nobody has a crystal ball. Speaking of people that are not Bitcoin OGs, but really enthusiastic about Bitcoin, Michael Saylor's been all over the media because MicroStrategy acquired another 12,000 Bitcoin for $821 million over the weekend, keeping them just slightly ahead of BlackRock, who's soaking up Bitcoin faster than we can print it. And that battle may be over because BlackRock soaked up at least $1 billion worth of Bitcoin just yesterday. The numbers aren't out for today, but yesterday BlackRock soaked up 11,946 Bitcoin, putting their stack at 212,169 Bitcoin, officially making them hold more than 1% of all the Bitcoin that will ever exist. If it weren't for the fact that we have a proof of work algorithm where holders of Bitcoin really have no say over the Bitcoin protocol, over the Bitcoin network, that would be scary. Could you imagine if we had gone to proof of stake, where basically your say in what the next block looks like and what the rules look like is based on how many Bitcoin you own, or in that case, how many ETH you own? Aren't you really glad we're not proof of stake? Because BlackRock and Michael Saylor would effectively be able to do not everything they want, because that's only 1% and 2% of the Bitcoin network, but we'd be getting increasingly more powerful. And because we're Bitcoiners and because Bitcoin is a proof of work network, it doesn't matter that they own that much Bitcoin, other than the fact that's Bitcoin that will never be available for plebs to stack. And that's kind of sad, but hopefully you already have stacked at least enough. We never have enough, but at least enough that you won't be left out when we do talk about Bitcoin hyper-Bitcoinization. Despite this all-time high, despite the rally, despite the fact that BlackRock is soaking up Bitcoin that you'll never be able to buy, we are still early. We're early both in this bull run and early in Bitcoin adoption. Evidence of that is the fact that not a single no coiner has mentioned Bitcoin to me yet this bull run, or asked, "Are you still into Bitcoin?" Last time when Bitcoin broke the previous all-time high, I had people coming out of the woodwork, even no coiners, even people that never ended up getting into Bitcoin would say, "Hey, I saw Bitcoin's at 30,000. Wow, that's pretty amazing." And of course, as soon as Bitcoin died again in their minds, they completely forgot. I have a hat with a Bitcoin logo on it that I wear sometimes. It's kind of incognito. If you're not a Bitcoiner, you might not notice it, but if you're an orange pilled pleb and you see it, you'd know what it was. And only one person has even noticed it, and that was somebody in the iPhone department at Costco. The person selling laptops and iPhones and MacBooks saw my hat and said, "Nice hat." And that's all they said. But I knew that they recognized it and that they knew what it meant. But I fully expect little old ladies in Costco to notice my hat and go, "Oh, you're a Bitcoiner, are you?" When the bull run is really underway. And it's the old adage, even before there was Bitcoin, they used to say that you knew that the stock market was in a bubble when you're getting tips from the shoe shine boy, which used to be a thing. I suppose the modern version of that would be when your Uber driver is telling you about their Bitcoin stack. And that hasn't happened yet. And of course, that's not a surprise because we haven't even had the halving. FOMO has yet to truly begin. This price action is almost exclusively because of the ETFs are trying to purchase more Bitcoin than exists. For example, before the halving, 900 new Bitcoin are mined a day on average. And as we mentioned, BlackRock bought 11,946 Bitcoin just yesterday. So, more than 10x the number of Bitcoin that are mined in any given day. And when the mining cuts that in half to 450 Bitcoin, that's just insane. So obviously the rules of supply and demand say If there's a lot more demand and the supply hasn't changed, the price has to go up to accommodate that. And when the price gets cut in half as well, when we have both a supply shock and a demand shock, that's what, in my humble opinion, usually triggers that 4-year halving cycle bull run. And that hasn't even happened yet. So hold on to your hats. American Hodl tweeted, I don't know, it's been almost a week now. It was right after last DCA Wednesday, something along these lines, saying, thinking it's, quote, too late to get into Bitcoin is an illusion of the ego. And then posted a GIF from Pulp Fiction where, he's talking to Bruce Willis about throwing the fight, because Bruce Willis is a boxer in that movie, if you haven't seen it, and he's supposed to throw a fight so the gang boss, the mob boss can make some money on it. And he says, you feel that? That's pride effing with you. Anyway, he tweeted out that GIF with a poignant phrase about how it's not too late. And that if you do think you're too late, that's purely ego setting in. And to some extent, it's fear more than ego, because, I've been stacking for a lot longer than I've been doing this podcast, and I've stacked probably as hard as I possibly could. Could I have, gone totally homeless and lived under a palm tree on the beach to stack even more? I guess so. But realistically, I stacked as much as I could get away with stacking and still have a family. And even I feel like that's not enough. I mean, it's going to be more than enough. I feel almost spoiled or greedy to say that it's not enough. But when you're talking about this is going to be the future of your kids or your grandkids, it's generational wealth you're trying to build, you really want to feel like you've stacked enough. And if you have that mindset, it almost never feels like you have. And so maybe it's ego, maybe it's greed, maybe it's fear, the ultimate FOMO, fear of missing out for your heirs, for your future, the future of your family. All right, I had a little bit more I was going to get into. I wanted to rail on daylight savings time, because daylight savings time, as I mentioned about a year ago when we did this shenanigans, is a scam. Just I'm going to get one thing out. If you're a moron, if you're dumb enough to think that you get 1 extra hour of daylight, if the day's 1 hour longer because the government pretends it's a different time than it is, you're part of the problem. And you're probably not listening to this podcast because you believe in magic printed Fed bucks, and you believe that 2% inflation is necessary, otherwise nobody will spend their money, and that they have your best interest at heart in Washington, D.C. So I probably can't help you, but daylight savings time is a crock. And I wish personally that we could not only just get rid of the whole daylight savings time shift, that we would just go to universal coordinated time, because all that really matters is that the sun is up or the sun is down when it's all said and done. I mean, it's nice that we have a fixed agreed upon time when we can meet somebody somewhere, or when we know a store will be open or a store will be closed. But those are all just fiat constructs. Using block time would be, for hours of business or meeting somebody would be a little harder. Kind of like, for example, if you're trying to have the halving party and you want to know exactly when the halving party should be, you don't even know what day that's going to be on at this point in time. So I understand why we need a universal time. But speaking of which, and not perhaps uncoincidentally, that's why I think we ought to just go to using universal coordinated time, UTC. Speaking of scams, though, the one thing I do have to get into before we mark our stack is the COPA versus CSW Wright trial is wrapping up. I believe we have another day or so of closing arguments, and then it goes to the judge, and then it'll be all said and done whenever the judge issues his final ruling. But COPA has basically made official what we've all thought all along, with the vast number of lies and forgeries that have been exposed during this trial. I mean, we've heard tales about forgeries and lies all along. It's kind of obvious to those of you who know anything about Bitcoin, because clearly CSW really doesn't. But when you lie and you prevent false evidence in a court of law, that's a crime. And in the closing arguments, COPA said what we figured was going to be the case. Quote, "In short, he has attempted a very serious fraud upon the court. To give fair warning, COPA will ask after judgment that the papers be referred to the Director of Public Prosecution for consideration of prosecution for the offenses of perjury and perverting the course of justice." So I know after all the grief that CSW has put Bitcoiners through, not just Hodlonaut and not just Peter McCormick, but Bitcoin developers that he's threatened to sue out of existence to try and hamper, prevent people from improving the Bitcoin and maintaining the Bitcoin core protocol. It would be just desserts to see CSW go to prison for lying and for forgery, because I guarantee you, if you or I mean, if you file your tax return, you have to sign on it. I promise under penalty of perjury that everything on this form is true. You make a mistake, you're lying to the IRS, you can go to jail. Why the heck should CSW get away with that when he's literally trying to perpetrate a fraud, not just on the court, but all of humanity? So it looks like his chickens are finally coming home to roost. You shouldn't be a vengeful person. You shouldn't harbor hate in your soul, but it will be gratifying to see that turd go to jail if that actually happens. And who knows what the judge will end up doing, or because proving that he's a fraud and that proving that he committed fraud are two completely separate burdens. And I'm not an expert on the British legal system, as I've mentioned this entire trial, but in the United States, for example, the burden is beyond reasonable doubt. And what you and I think is beyond reasonable doubt, and what you can convince the 12 people who are too dumb to get out of jury duty is beyond reasonable doubt, aren't always the same thing. So I have no idea what will happen, but there will be a little bit of schadenfreude there, a little bit of smug satisfaction if he ultimately ends up in jail, in addition to just losing all these lawsuits that he's filed against people that are just trying to make the world a better place. Speaking of frauds and lies, CPI, the official inflation numbers, came out on Tuesday, yesterday, and of course they were higher than expected. That didn't have a really big effect on the stock market, but it did have a moderate effect on markets because everyone was expecting CPI to either lower or remain unchanged, with the hope that the Fed would start giving more free money again and lower those interest rates. Of course, that didn't happen. And obviously, remember, these numbers are usually massaged. They're always massaged in the first place because they're lying, basically, changing the way they do calculations, substituting goods out of their basket of goods to try and paint a rosier picture than reality. And if they can't even do that to keep inflation from going up by 0.1%, or whatever the number came out, they're trying really hard to do so. So if they had to admit that inflation went up at all, it's obviously a lot worse than it would be. And along those lines, this isn't Bitcoin related, but I'm a big Hatch green chili guy. I really love spicy peppers, and I'm practically addicted to the Hatch green chili. If you've had them, you know what I'm talking about. If you haven't, you're missing out. But I got an unsolicited ad on, I think it was on Facebook or Twitter, for a ketchup made with Hatch green chili. So a spicy red ketchup. I thought that sounds intriguing. It's $9.95, so it doesn't sound $9.95 worth of intriguing. I'm not a huge condiment person anyway. I mean, I like salsa, but ketchup and mustard have their place, but I'm not a gourmand when it comes to my ketchup. Anyway, what caught my eye on this was that they've got a thing right at the bottom where it says Hatch ketchup, Hatch-up, like ketchup and Hatch-up, spicy Hatch red chili ketchup. Pay in 4 interest-free installments for orders over $50. Plebs, this is supposed to be the best economy in 50 years if you listen to the Biden administration. People are financing their freaking ketchup. If you are buying ketchup on credit, if you're buying bargain ketchup on credit, there's something seriously wrong, because that's way beyond just the fiat mentality. That's reckless. It's desperate. I don't even know the right word for that. All right, last thing I wanted to touch on before we do our DCA stack is, I don't like TA. I already mentioned that I like charts, but I like historic charts. There is one chart that I follow religiously, and that is Econometrics chart on Twitter, Econometrics on Twitter. And they've been putting out a chart periodically that shows the price trajectory, current price trajectory, and then it has the price range from the previous halving cycles and the average trajectory. And this they only have a couple data points to work with here, so it's hard to say we're out of the range. Obviously, the last cycle was out of their range on their chart, but nonetheless, we're only a month away from the halving. This chart will start anew on April 19th or 20th after the halving occurs. And it'll be interesting to see where the next halving goes, because this halving came in under the trajectory. And if things look like they're going to go hyper Bitcoinization, they'd obviously be coming in over the halving trajectory. Anyway, nobody knows. It's fun to watch. This chart kind of lets you look at it in real time, at least up to the last 24 hours of the data. And it's a pretty cool chart. And it's been fun to watch for the last 4 years, and it's going to be fun to watch it again. So if you're not already following Econometrics on Twitter or at econometrics.com, I'd recommend you do so. It is a lot of transaction analysis, a lot of voodoo, a lot of BS that I just completely ignore. I only follow him basically for this chart, and every once in a while he puts out some useful charts with actual data that aren't forecasts. For example, this is not a forward-looking. This is a historic chart where we've been, the prices we've had. There's no guesswork here. It just shows you where we were, where we are right now, where we were 4 years ago, where we were 8 years ago, and everywhere in between. So that's a cool chart. Okay, on to the real reason we're here on Wednesdays, and that's because it's DCA Wednesday, and DCA Wednesday stands for Dollar Cost Averaging Wednesday. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 138th stack. We started stacking our equal portion of $20 and our regular interval of Wednesday, every Wednesday back on July 28th, 2021. So far we've stacked 137 times, converting a total of $2,740 into a stack of 9,041,619 sats. I was optimistic that we'd be able to make that a stack of 10 million before the halving really made things go crazy here next fall. Obviously, it went crazier sooner than I would have hoped. But nonetheless, 9 million sats is nothing to turn your nose up at, especially since we did it only $20 a week. And we did so for an average purchase price of $30,304.31. So less than half of what Bitcoin's currently valued at. And we're going to grow that stack today by using the handy dandy Cash App. Cash App is not a sponsor of the show. I just think they're the easiest way to stack small amounts of Bitcoin. And I already have $20 on Cash App because somebody reimbursed me for something I purchased the other day. So all I need to do is tap Bitcoin, tap buy, manually enter $20, because sometimes that's one of the things you can just tap on. This time they've got $25 instead of $20, but we're going to enter $20. Tap confirm. And boom, just like that, we purchased another 26,818 sats, bringing our stack up to 9,068,437 sats. Unfortunately, that is increasing our average cost basis by another $130.92. That is the largest average cost basis increase we have seen in quite some time. Obviously, that's just par for the course. When you're on a bull run, the price is going up, your average purchase price is going to go up. Either way, though, our average cost basis is just $30,435.23, and that is not too shabby at all, considering we just purchased Bitcoin for the US dollar equivalent of $72,899. And that is more than $6,000 more expensive than our last purchase. It is, as of now, our all-time record high purchase for this podcast. I expect that to increase as we go up into the right, because unless we get some ETF fatigue and people stop investing all of a sudden, or who knows what happens, and that peters out for a while and then doesn't really take off again until next fall, when I would have expected the bull run to really kick off in earnest. Either way, even if that does happen, I fully expect Bitcoin to have a much, much higher new all-time high before it's all said and done. Obviously, in the previous cycles, that ultimate all-time high is about 18 months or so after the halving. So that would be in 2025. And we're a long way from there. So be interesting to see what happens. All that I really care about, though, is stacking as many sats as I can while someone is still willing to part with them for fake printed government monopoly money. All right. I look like I've got this about wrapped up, and we're well under an hour. So that's the first time I've promised to keep it short and sweet, and it looks like we're actually going to do so. So before I go, I want to ask you to help support the podcast. Of course, you can do so through the value for value model, like Leggy when he sent that boost to help support the podcast, but you can also do it for free just by doing little things like rating or reviewing the podcast on whatever platform you're listening to, making sure you have automatic downloads available so that you don't forget to listen to this podcast. And you can also do so by following us on Twitter. Again, we are at BTC Bulletin Pod on Twitter, at BTC Bulletin Pod. And I still would like to hear from you, even if you don't have the sats to help support us. I understand sats are getting expensive. I do appreciate every sat that you send to the podcast, but more importantly, I appreciate knowing you're out there listening. And if the best you can do to support the podcast is just give me a shout out in DMs on Twitter, I would absolutely love that. So if you haven't already followed us on Twitter, follow us at BTC Bulletin Pod. Send me a DM. I do check them, even though it's almost entirely scams. But I do check those DMs. And that helps feed the algorithm monster and helps expose more people to this podcast, which will help us orange pill more people. Of course, if you're not on Twitter, we are on Nostr as well, and my NPub is in the show notes. And if you're neither on Nostr or Twitter, I would still like to hear from you. You could send me an email. The email for this show is bitcoinbulletin@protonmail.com. Again, bitcoinbulletin@protonmail.com. And most importantly, do not forget to join us next Wednesday and every Wednesday for our DCA Wednesday episodes while we soak up every last sat that people are willing to sell us, at least $20 at a time anyway, for the purpose of the show. But either way, until that time, keep on stacking those sats, you sexy sat stackers.